Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening. As we're here now on Thursday, the 31st of August, the last trading day of August, 2023. Bye-bye. We're now going to be looking at what? A whole series of reports in the morning. Let's take a look and see what we've got before we even get there. Let me bring you right here. You got the non-farm payrolls. You want to be up 7:30 a.m. Central Time, seeing what the announcers have to see. What's the number? Guesstimate is 170,000 jobs. Unemployment, 3.5%, and about a 0.3 of a bump upwards in salaries. By the way, more and more coming out. GM today and Stellantis, UAW, attacking them in the courts for what they're doing and more suits. So those are probably two of them right on the front line that may be struck come, September 14th. S&P Global Group, they're going to release their PMI numbers, their manufacturing sector PMIs at 845, ISM, manufacturing sector index at 9 o'clock, and construction spending. But today's event is going to be, and you can count on it, one thing and one big thing, and that's going to be that labor number. Then we'll quickly shift and start talking about CPI, PPI. But anything under 170,000 jobs is going to get the attention of the people that say the Fed does not have to go and make any move in September. They can wait and see if things pop back, or does the trajectory keep falling? Because you're weakening the job market. We saw it in JOLTS. We're seeing it in some of the other areas. Tonight I put out the temporary help. What's been going on there? I put it in my news report, my full research, that is, and it'll go out tonight about 7 o'clock. And I showed that for the past 6 months how that's been falling. Now, the interesting thing to me always about temporary help is that's the easy people to hire and get rid of, because you're not bringing them on full time. They know that. They're coming in hoping if they want a job, maybe they're good enough they can stay, or they know that, hey, it's just temporary. I'm only here for 3 months. I don't care. I'm not going to have somebody mad at me. There's many ways to look at it. But the fact that it's falling, not going up, is normally, I use the word normally, harbinger of a softening market. With COVID, everything got skewed. We know that. We know that how the government threw helicopter money out and people doing things. And now everything's coming home to roost. All I saw, and I saw it tonight in local here, they're showing you how people should manage their credit card debt, because 3.5% right now of car loans and credit card payments are behind. That's a big number, and it's climbing right now through. So the easy money the people got is gone. And now the question is, what do you do to pay? And we all know come October, these student debts are going to have to be paid. So there's another element coming at the market. But we're going to deal with the labor market tomorrow. When I come and I look at the S&P, the market is up 2.33% for the month. It gained back quite a bit. You have to admit, the market was in the toilet, and the month's over now. So it came back. When we take a look at the chart, if you look here where you're at 45.17, you started off the market at just over the 4,600 level. You're down about 100 points. Okay, but that's not the crash that we had all the way down here under the 4,400 level. So the market did a good job in the last part. Now I want to scare you. This rally might have got the market into something of an overbought status if it doesn't get a good jobs set of numbers. Let's see. You're coming up. You can see how the market's made a run. It's running right into the Bollinger Band resistance, and it's overbought. Get scared. You either get such a good number out in labor that you develop the embedded reading, or an overbought situation in a market that has had this nice recovery can give that back and then join the rakes potentially of that weak September timeframe. I don't know that we wouldn't have been better off down for this month so that you cushion that often trend that we get of a bad September. I just don't know. But coming up sets the stage that if things don't go the way we want tomorrow, September could end up being one of these ugly months. By the way, what you'd want to look at is the break lows you just had, because that'd be your support zone if the labor reading says, hey, this market, the Fed's probably going to go with another hike. I don't know what it's going to say, but after I see it, and I'll be on it, 8:15 in the morning, I normally do my morning recording, be certain to tune in. You've gone from the lower band to the upper band, and you're overbought in the NASDAQ. I think it's reached its upside target on this run. And here, too, is another market that got, as you can see, right up here, came back, and it just made back literally the whole thing that it lost. So another market that's going to be interesting for September. When we take a look at the Dow, we come back to the August numbers, which were right here. You finished up right here, a bit of a break, all right. Not quite as overbought as the other markets and hanging around the 18-day average of closes. Is there a trend or is not? When you look at the Russell, another one of these with no trend, lower low, higher high, not overbought either. Again, here's a market that made the high here, finished up right over there, not quite there. So it's the NASDAQ that made back everything. Let's thank NVIDIA. Did a good job. You got Salesforce rings. You had a bunch of companies that are doing better. This is the good news that we're dealing with. Now we get to the bond market, which is overbought. That doesn't mean it can't make a run for the upper Bollinger Band, but it's nowhere near locking in this uptrend. That's the point. It's overbought. It's going to be easier to break than rally because it's overbought. When I come to the 5-year notes, overbought. It's going to be easy to battle at the 18-day average. The problem for the market is if it starts down, the lower Bollinger Band is back. Tomorrow is just such an important day on the charts, I can't begin to tell you. And in the dollar, if you take out the lows of today's Thursday, of Wednesday, that opens up the door down here. If not, you still have the door to the upper Bollinger Band, but you don't have a bullish scenario here. You have a market that lost its embedded reading. It went to where it should go, the 18-day average, and it's hanging in there. It'd be easier for this market to be bearish than bullish. If this is taken out, the lows of 102.85, you do open the door for that challenge of the 102.20 area very quickly. In the eurocurrency, you went right where I thought, the 18-day average, and went into a sudden stall today. You lost actually quite a bit of ground if you think about it. Look at how much you were down today in the marketplace. You were down nearly a percentage point, 3/4 of a percent point, down 81 points. That's not a small move. That's a monster move. You don't get a lot of 81-point moves like that. I attribute it to a couple of things. Number one, the first challenge here of the, if you look at it, the 200-week average and the 18 after you've broken under them. Number two, the labor. Got to keep your eye on all that. British pound, which way will it go? It's in the resistance of the 18-day average. It's corrected an oversold condition. It's got the swing line up, but it's got the bias down. Tomorrow is just so important for the currency markets. In Bitcoin, what's going on here? They get a big win and it can't hold. And you tell me, everything I teach in my charting course, that the first bounce normally goes to the 18-day average of closes. Textbook what I teach in my course. Then we get to Brent versus WTI oil. Look at how the market's slipping back here. Yet oil's acting good. Even with Iran continuing to really produce a lot of oil and get it out into the marketplace, the market is back up to the resistance that we just talked about over the past couple of days of the Bollinger Band. It need not go further. The market's now overbought right here into the Bollinger Band. Same in the WTI. I'm not bearish, but I would never tell a client to buy a Bollinger Band. Gasoline sort of drifting around right now. This is the last big driving holiday, and then it's wintertime that we start looking at. And I'll switch from gasoline now to heating oil. That's going to happen in September. And in that gas, I'm looking to see what's going on in Australia, because a lot's going to play there. They're going to have a strike. I included in my full research report tonight what the different liquid nitrified gas companies there are doing, which ones have agreed to not go on strike, which ones are still debating what to do. It's a real important issue because, remember, 11% of the Asian basin's oil comes from Australia. Now, not all the companies are going to be struck. That's important. So now you start taking down that percentage. But The companies they're trying to strike or considering striking are the big boys. Let's see what that all does. So you put it together, you come up with ideas here, and that's what I try to do. I want to remind you, if you're interested in taking now advantage of the sale that I have for 40% on my research, education, move your cursor to the very top up here. It'll take you there, or go to iraepstein.com under research or education. I'm Ira. I'll see you first thing in the morning tomorrow. Take care.